Ben ritrovati, si apre un'altra settimana per la borsa americana, siamo sul floor del New York Stock Exchange, una settimana in cui vedremo nuovi dati economici, ma soprattutto seguiremo ancora una volta le notizie che arrivano dall'Europa. Ne parliamo con il mio ospite qui sul floor, che è Kenneth Polcari, Managing Director per ICAP Equity Partners. Kenny, thank you so much for being with us.
Thank you for having me.
So another week for the US stock market. Last week it was a very good one. We touched very important levels. This week, fears about Europe are back.
Well, it's fears about Europe, it's fears about oil. We also, from a technical point of view, we did hit those high levels last week, but they actually all represented resistance. And in fact, we bounced off them 3 or 4 times, right? We kept trying to go through, we bounced back. And so therefore, I think you've got a little bit, certainly I think the issues today are much more geopolitical. I think that's certainly what's going on in Greece, what the G20 did not do over the weekend, that they did not come right out and say, okay, here's more money. They want Germany to take a bigger role, which I think is presenting a little bit of a problem. It's kind of bringing the whole thing right back to light again, and people are reassessing what the potential damage could be. And then you have the oil issue, right, between Iran and Israel, and what's going to happen to the price of oil, and then the price of gas, not only in this country, but around the world.
And staying on Europe a little bit, do you think that what is happening now is just a tentative to buy more time, and really the future of Greece is becoming a little bit more uncertain?
You know, I've always been one to think that ultimately Greece is going to end up defaulting and leaving the Eurozone. There were actually some interesting comments this morning from one of the German finance minister talking about that they're going to make Greece an offer they can't refuse, right? And they're actually going to kind of usher them out. And then the fear is, okay, well, if they do that to Greece, potentially what happens to the other periphery weak nations, i.e. Ireland, Portugal. And so I think that's another reason you're seeing some weakness this morning, because, you know, it's kind of opening up a bunch of doors. Although I don't think any of that is new, which is kind of interesting. And the truth is, I think as we go longer and longer, that the expectation is that Greece is going to ultimately bow out. The truth is, for them, if they stay in, it's going to be a long, long, long road for them. If they bow out and go back to the drachma and devalue their currency, I think their turnaround is much quicker. People don't want to see that, but I think that's the reality.
And now going back to the price of oil. I mean, this morning we are back under 109, but still it's a very worrisome level, and the impact on the economy might be dangerous.
That's right. You know, last week we heard, and it's very interesting. You know, there were two sides of the oil argument. People were saying, "Oh, oil's moving up because the global economy is doing better. Demand will be better, and so therefore that's a positive sign. So the fact that oil's moving higher is great." I'm not of that belief. I think oil's moving higher on speculation and on fear between Israel and Iran, and that eventually there's going to be a conflict in the Middle East, which is going to cause oil to go higher. Now, U.S. economy as well, the global economy continues to be kind of in a fragile state of recovery. So in my opinion, oil going higher and gas going higher is not good for anybody. I mean, listen, you know as well as I do, Europeans already pay through the nose for oil and for gas, right? I mean, rates of what you guys pay over in Europe is incredible to us. But even over in this country, they're talking about $5 a gallon this summer. I'm already paying $4.70. And I live in New York, right? So I'm paying $4.70. So where am I going? At $6 a gallon. So in my opinion, I think it's going to be tough for the market.
Especially in case of a conflict.
Absolutely. If there's a conflict, I think it even gets worse, right? I mean, it's hard for me to believe that oil is going up because the economy is getting so much better. I'm still not feeling it. I know, listen, we live in the New York tri-state region. People don't feel it here. Maybe it's happening in other parts of the country. I don't really think that's the real reason, though.
And also in other part of the countries you were mentioning, they are more dependent. They really drive more their cars compared.
That's right. In the Midwest, there's no public transportation, no subways, no bus. So I don't think it's going to be a pretty picture as we move into the summer.
Now, looking at this week, like more short term, a lot of economic figures coming out in the United States. We're going to see a lot of data about manufacturing, and we're going to see the GDP revision, and that's going to be kind of important. But also in Europe, we have a lot of auctions.
That's right. And so what I think, two things are going to happen. In the States, they're going to look at this macroeconomic data, and the market's going to look for anything that it can see that's going to continue to tell the story that we're getting better, that the economy is improving. This morning we saw pending home sales were higher than expectation. Once again, though, there's a disconnect for me between the housing numbers because there's so many different housing numbers and they're all conflicting. So I still think that housing is going to be an issue in this country. But as we go forward, positive results from any of this data to continue to fuel the story. Over in Europe, you've got, ECB is certainly the big thing. Wednesday when they're going to talk about, right? So I think they're going to open the floodgates again over there to help stabilize those markets. Listen, I understand that has to be done the same way the Fed is continuing to stabilize our markets here. But at some point, somebody's got to pay the piper, right? When does it stop? And that's really the part I think that whether it's happening now, whether it's happening 6 months from now, the reality is going to hit, and somebody's going to have to be responsible.
Thank you very much, Kenny, for being with us.
Grazie.